All right, let's get this show on the road, shall we? All right, how is everybody doing tonight? How's everybody's fantasy football going right now? Mine's doing all right. I had some issues. Let me see if I can pull it up real quick, just so we can laugh at my my team a little bit. Let's see. Oh, I'm not signed in. That's annoying. Let's see. Futures are doing okay. If you're trying to tune into that, there you may look at it and be like, "Oh, we're gapping up." We're not. If you notice, it says that we're only up a point, even though it looks like we've gapped up like 20 points. We haven't. We've basically what has happened is we've had a rollover period, and basically that's just a contract rollover, transitioning from one futures contract to another, since we've had the quarterly expiration. Okay, maybe we won't look at my fantasy football because it's not loading up on Chrome. Maybe I can do it from here on Edge, because who uses Edge? I think this happened to me last time. That I tried to pull it up, it wouldn't really do it. It'd be all right. I don't know why it's being stupid. Anyway, how are we doing? How's everybody's weekend? Everybody doing good? No, I don't want to try that for free. Let's see. Our weekend was pretty good. Let's see. We watched some football. Let's see. Smoked cigar. Yeah, everything's pretty good. Great weather. We did get this crazy storm last night at like 5 in the morning. It just like poured down raining, and it wasn't raining anywhere else. It just poured down right on top of our house. It was loud, like just straight down rain, loud. But yeah, good quiet weekend. Let's see. I tried to go see my grandmother, but she is a little under the weather right now, so we decided not to go over there because we ourselves got to travel in a few weeks, so we don't want to risk getting sick or making her feel worse because she's got to get up and go. She's 94 years old, so she didn't want to push her buttons too much. All right, I'm sure y'all aren't here for my life stories. Y'all want to get to the nitty gritty, so we'll jump into it. As always, if you have any questions, feel free to shout them out. If you have any ticker requests, also point those out as well, and we'll take a look at them. It's been about 2 weeks since we've done Sunday night prep, and let's see, we had the holiday, then I had some family stuff the other weekend. So yeah, we're getting back into the swing of things. But you know what? Yeah, honestly, you haven't really missed a whole lot. If you've read my notes over the past few weeks, nothing has essentially changed when it comes to the key levels here. SPY has had a decent bounce here. We've got a little bit of a resistance here at about that 453.52 or 453.50 mark. We'll just call it 453.50. And since then, we've just kind of rolled back over. We whacked our head on resistance, and we haven't been able to make any substantial progress. And as you can see, these moving averages are starting to flatten out. And you know what this essentially is, at this time being, is, we've had this great move higher off of the lows. We had a nice bullish weekly squeeze, fire long here, and since then the squeeze is essentially finished. It's ran its course, it's done its job there, and we hit +3 ATR on the weekly, and we've just essentially rolled over. Basically, the run is done. The trending move is completed, and now we're just taking a extended breather. And I've talked about this a few times and compared it to some historical data, believing that that essentially we're just going to be trading kind of sideways in this range bound situation probably for a while at least. Maybe we'll get some kind of trending move once we get the Fed, not this week, but the upcoming week. This week we have CPI data and PPI, so we do have the inflationary data that could possibly move markets. But overall, what we're going to be paying attention to is that inflation data and any kind of cues that might give us with the Fed policy. Now, if you haven't been paying attention, energy has been on a pretty decent rampage, and we all know that energy plays a key role into the inflation data. So we definitely want to kind of be aware of that. And, the Fed is paying attention to that data as it comes out. and we'll have to see where things go. As of right now, though, the probabilities of a Fed rate hike this upcoming meeting on the 20th is pretty much baked in that they won't do a rate hike. It's not guaranteed, of course, but the probability standpoint is that they won't raise rates this go around. But there is that possibility that come November, that they will raise rates again by a quarter of a percentage point. So we are kind of paying attention to that data, and we'll have to go from there. But for the most part, we've gotten earnings out of the way. There's no true catalyst out there in the market up until we get at least the Fed. So that's kind of what this market needs. It needs some kind of catalyst to get us going. And right now, we just don't have one. There's nothing really to look forward to. Everything's priced in. There's no surprises going on right now. Of course, it's surprise. We just don't know. Right now, there's just nothing exciting going on within the market. Inflation's still there. Rates are still high. Energy costs are going higher. I feel bad for the people living in Texas. Let me know how y'all are with y'all's energy prices. I read a report that, someone was having their, AC at 80, everything else is turned off, and their energy bill was still like $400, something insane. So, I know we got a lot of members in Texas, so let me know how y'all are doing as far as y'all's energy bills go. Let's see here. Let me make sure. Yeah, we're good. I thought I had my mic muted on YouTube, and I was like, oh, crap. All right, so as far as the SPY goes, right, we're looking here at the SPY. Not much has essentially changed. We are seeing interesting moves as far as individual names, but when it comes down to the key indexes, we're just not doing a whole lot. We're still stuck in this glorified box. Like I said, the upper resistance level is this 453.50 mark, and the lower end of that spectrum is all the way down here at about that 431, 426 zone. So until we break either above 453.50 or break below this zone here, we're just sideways. And until we get that break, there's not much we can, really, be too heavily involved in, because we need to shorten our time frames and focus on pockets of strength. Whether you are a market bull or if you are a bear, focus on those pockets of weaknesses. And there are definitely names out there that do have pockets of strength, mainly with the energy boys, mainly with the FANG names. So what we need to do is just use our multiple time frame analysis, learn our speed. And what I mean by that is your swing trades need to be shorter. So, I've been a little bit of a preacher of, swing trading is very difficult, and it is. But your swing trades don't need to be longer than a few days. If you're swing trading, they need to be very short, 2 days or 3 days, however much. But I wouldn't go over a week as far as like swing trades. We need to focus that down, because the main index and the main pool of the ocean, so to speak, is there's a lot of to and fro, a lot of back and forth. There's a lot of chop. There's a lot of mess out there. And, what we need to do is capitalize on those shorter time frame movements. So zoom into your 1 hour charts and your 15-minute charts and focus on those. Treat your 1 hour chart the way you would a daily chart. Treat your 15-minute chart the way you would a 1 hour chart, etc. And then, if you're not a day trader, this is a great opportunity for you to hone in those skills. If you're not comfortable with 1 minute, start practicing with a 15-minute chart. Once you get comfortable with a 15-minute chart, then work your way down to like a 10-minute, a 5-minute, and so on, until you get more and more comfortable with the speed of those price actions. So, be a master of yourself, learn trade what's comfortable for you, and learn to improve and adapt to the current market conditions. And that's what all trading is all about, is learning to adapt and not being so focused in on certain things. Learn to evolve with the market, because the market is ever changing. And right now this market is a lot of back and forth. There are pockets of strength, pockets of weakness, like I said. And now's the indexes, they're just kind of stuck. But we're going to take a look at a few names here that we can possibly take advantage of as far as day trading opportunities, as far as those pockets of strength and pockets of weaknesses. So, like I said, for SPY, we can't get overly bullish until we at least break above this 453.50 mark, and we can't really get extremely bearish until we break below 431. Now, if you look at this, last week we didn't really go anywhere. It's an inside week candle. This candle on Fridays, pretty much an indecisive candle, nothing too crazy going on. You could say that the bears are relatively winning the shorter term battle, just because we've gotten a slight rejection off the daily 50 from the underside, but we really just need to confirm that and get more data. Last week was a short week, and September is usually kind of a bleh month in general. So the bears might have something in there that they can possibly send things lower. But of course, if they do send things lower, they're going to have to break through a few minor levels, of course, 435, then 431. And then, we'll see what happens from there. But as of right now, yeah, we're just kind of sideways. And that's pretty much all you need to know. If we translate that to the NASDAQ, the Qs, it's pretty much the same story here across the board. And that's what's kind of the sweet thing here, is that everything's pretty much the same here, especially when it comes to the S&Ps and the Qs, especially to the main indexes. The Qs, it's not really doing anything spectacular here either. It's very sideways. It had a few closes above this 375.66 level. They couldn't hold it, and they came back down. Again, a very indecisive candle on Friday. They couldn't really break it up. They couldn't really break it down either. Inside week last week also. No progress was made on either side of the spectrum. And yeah, continue to trade the smaller time frames here. And, for now, it looks like it had a nice trend off the lows at 260 and made a nice move, 387. That's a pretty impressive run for the year so far. And it looks like the trend is just over, and it's just taking its breath. It's taking its time to resettle back in, reevaluate, maybe wait on a better catalyst to come up, and then we'll go from there. But as of right now, it's not broken, and it's not breaking up either. So, as far as the Qs go, we need to see a move at least above the 383.70 level. First step would still be a close above 375.66, then a close above 383, and then we can go from there. What we don't want to see is a breakdown and a close below about that 357.5 move here, where we've gathered a decent amount of support here. We did, had a little bit of a scare there, but that was a nice little trap that they set up, and we pushed on ahead. So we don't want to see anything break down and close below 357.50 as far as everything goes. But if we do start to break that, then yeah, we can start to put on our bear caps and see what can happen. Because if we start to break this 357.50 level, yeah, there's not much really to stop it until we get to about that 337 mark, which would be a retest of the 382 and possibly even the daily 200. So you don't want to really see that close below 357.50 on a daily closing basis. If we go over to the small caps, so we'll get into individual names in a second, but we need to look at these broader markets first to get a better understanding of where things are at. Now, the IWM, it came all the way down to the daily 200. This is where we formed a nice little base and a launch pad from, and we pushed really quickly into that 191.50 resistance level. And from there, since then, we've just kind of rolled over, and look where we're at. We're right back retesting that support zone. So we are at an interesting spot here with the IWM. What you don't want to see here with the small caps is a breakdown and a daily close below that daily 200 is also where the year-to-date volume weighted average price is, this dotted blue line. This is about your 183, 182 mark. If we start to lose that, you possibly can have a retest of the 180 support. So it's about a 3-point move, but it would be a very naughty signal to have a daily close below the 200. And if we start to crack 180, yeah, you're looking at 170 again. And, you know, it took a lot of work and a lot of effort for us to really break out of 180. So if we start to shoot down here, that, I mean, bulls are going to be incredibly disheartened. Think of that from a psychological aspect. It took so much effort to push on ahead and break out of this zone only to come back and crack through it. You know, there's going to be a lot of disappointed bulls in that market. And if you start to break down below the 200 and that 180 mark, yeah, you could get a nasty flush here on the IWM. You can see that we already have some negative connotations here with the IWM, where we have negative thrust on the daily as well as the weekly. So it is something that we need to pay attention to. Obviously, it's got to break down first and get that daily close on the IWM first before we can really consider, you know, really going short. But, you know, it is a little bit nasty. We got that 21 crossing down below the 50. We couldn't break through 191.50. And, yeah, we'll see if this is a good spot here for bulls to hold the line. So if we happen to see some cracks on the surface here, yeah, that could be pretty detrimental. And, you know, maybe that could, you know, drag everything else down, because you really want to see those small caps push on ahead. As far as the Dow goes, it's pretty much the same as, you know, when you compare it to, you know, the SPY and the Qs. Very sideways. It's had a decent little upward trend. Weekly squeeze fired long. It ran its course. Now it's just chilling out. Nothing really to write home about. Now, you know, according to Dow theory, we have to pay attention to the IYT and the transports. And if you compare this to the Dow, transports are pretty much getting beat up as of lately. They had this nasty breakdown last week. Let me see if I can get my pen to work again. There we go. See how you had this nasty breakdown of prior support down at about 245. You have the bearish crossover between the 21 EMA and the 50 SMA. And since then, yeah, you broke that 245, and it's looking a little bit ugly. You got bearish thrust here on the daily as well as the hourly. And, you know, if the transports are having a tough time, that's going to be making things a lot more difficult for the Dow to push on ahead. So, yeah, it's a little bit ugly here for the Dow and the transports. If we look at the equal weighted S&P 500, this is the RSP. Everybody is weighted the same. Apple is the same thing as Ford. Ford is the same thing as Apple, etc. We can see that same thing here. It kind of looks like the IWM, doesn't it? Where we had this nice base forming here around the year-to-date VWAP and the daily 200. We pushed all the way up to the daily 50, rejected, and now we're back at it. So if we start to roll over, yeah, that's not going to bode well for the rest of the market. Yeah, we could see some trouble here if things do want to roll on down. You got some negative thrust here, but support is support until it isn't. So they still got, you know, a possibility to hold this 146, 145 zone and push back on up to about 150. So if you're an Iron Condor fan, or a put credit spread guy, this is not a bad spot to maybe take on some cheddar to hold the line for a, you know, bullish positions. But as soon as you start to crack and maybe get a hourly close or daily close below this, you know, you have to respect that stop, because this thing can puke all the way down to retest these 140 levels here. Man, that was a perfect line there. So yeah, pay attention to the RSP, the equal weighted S&P 500. Not a whole lot of strength there. Just, you know, we're basically kind of looking for some warning signs out there, and you're starting to get some on the IWM, the RSP, and, you know, we can't ignore the dollar. You know, this is something that professor preaches is something that I've been preaching for a while now, and it's to not take your eyes off of the dollar. The dollar has had a really fantastic bullish move. Unfortunately for, market bulls, the dollar is pushing higher and trending higher, is having a trending move. It did break above the prior swing high here of about 104.70. Now, the major test ultimately is going to be 105.90. If, I'm under the impression that if we just kind of chop around here, I think the market can handle it. But as soon as we break this next pivot at 105.88, 105.90, that is going to be a little bit of a nail into the coffin for market bulls. You don't want to see the dollar break out much further than what it already has. As you can see, if you look here on the daily, this blue line, that's your daily 50. Here's your red line, that's the daily 200. The 50 is starting to curl up, and you're almost getting this golden cross on the dollar, and that is just a no-no. You want to see a weaker dollar. Makes investing and makes goods better for consumers here. So yeah, we just kind of want to pay attention here for the dollar. It's still in a dangerous position. It had that breakout. It had the close above 104.70. And if anything, this trend looks pretty good still. And you, like I said, you're getting close to that golden cross. And we'll just have to keep an eye on it. If it breaks above 105.90, that would be a really big oh no moment for the market. Now, just like how we kind of put in this, there is a theory here that we could possibly have happen on the dollar, and that's kind of what I'm maybe feeling as far as the idea goes. Is we had this breakdown below the 100 mark, right? It looked like the dollar was going to roll over and the market was just going to have this great run into fresh all-time highs. Well, you definitely had some trap set up and off we've gone. Now, what I'm curious about is if we come all the way up to 105, trap some dollar bulls, and then roll back over. So that's kind of the scenario that I'm anticipating. Of course, if it breaks above 105.90, it can just keep on going all the way up to about 109, 110 for the next resistance zone on the dollar. But this is the kind of scenario that I'm playing out in my mind to occur, is that they trap the bulls. Now it's time to trap the bears, and in order to do that, we need to kind of come up to that 105.90 level. So that's kind of what I'm getting here. Maybe we get it at this 104.70 where we there's your trap here. Down at the lows, you trapped some dollar bears or market bulls, and you've shot up since then. Now is it time to trap some dollar bulls, market bears, and roll over? We don't know. We need to let this kind of play out and be patient with it. But as of right now, the dollar trend is pretty darn nice, and it is what it is, unfortunately. So until the dollar kind of settles in, we have to be a little bit on our toes. Like I said, it's another piece of that evidence to tell us, hey, we need to shorten our time frames, play things a little bit faster than what you're normally playing it out on. So if you treat your hourly as you would your daily, treat your 15-minute as you would an hourly. When you day trade SPY, where are you looking to find confluence with your idea of a call or put? Yeah, it all depends. When I'm day trading SPY, it really comes down to, I like to watch the 5, 15, and the 1 as far as day trades go. Let me see, where's my day trading chart? Here we go. So as for SPY, I'm watching a lot of things. I'm watching, where things are as far as the moving averages. I'm watching my indicators. I'm watching the squeeze. And I'm also watching the overall general market sentiment. For example, the ticks and the advanced decline issues. As you can see, the advanced decline issues made no progress at all on Friday. And the ticks also was kind of sloppy Friday. Friday was just really sloppy in general. It was not a... we had our fun in the morning with specific trades. I think we even took SPY on Friday as well. But it all comes down to market internals. where we are at. There's actually a lot of stuff that kind of goes into it, and if you're on live with me, you'll know that I'm very particular when it comes to how the market internals are looking. If the SPY is going up but the market internals are going down, that's a pretty red flag for me. And I try not to go long if the internals are disagreeing with me. So yeah, you just kind of have to, as far as my niche goes, I have to know where the market internals are at and where current support and resistance is and where the opening range is. Like for instance, we had a opening range break on Friday to the upside. We took that to 447, and yeah, that's all she wrote. That's all I needed for a day trade. 447 was actually a pretty big spot. That's where the daily 50 was, and we rejected and kind of had this grinding move lower. And we've kind of seen that lately too, as far as day trades go, where we've gotten these quick moves to the upside, a move back to the mean, and then you just kind of do this for the rest of the day. See what we did on Friday too? Big move to the upside, reversion to the mean, and sloppy. That's kind of been the case lately. Even to the downside move, reversion to the mean, slop. So, you got to wait for these opening ranges, be patient, a little bit patience, and play that opening range, set up your fibs, and look where your support and resistance levels are. On SPY on Friday, it was about that 447 where that daily 50 and daily 21 was, and we went from there. And also where the market internals are and where opening range is. So for me, there's several components: opening range, where the market internals are, and where current support and resistance is. And I'll rely on my indicators also, where a squeeze is occurring and if I have any positive or negative thrust to give us trend. So that's my thought process on that. I hope I didn't confuse the living crap out of you, but if you have any questions, feel free to ask on that. So opening range, do we have a squeeze? If not, that's okay. Squeeze is like a bonus for me. And then do we have positive or negative movement on the market internals, such as the advanced decline issues, as well as the market ticks? And do we have positive thrust? Yeah, based on a 15-minute opening range. You can go smaller. I don't recommend doing a 30-minute opening range. If you're starting out, I would recommend a 30-minute opening range, but to me, this market moves too fast. A 30-minute opening range is going to be too slow. So I would definitely start out with a 15-minute opening range. 15-minute opening range works for me. It works for Ace, and it works for Amar. There's a lot of us in here that trade 15-minute opening range. It's a good balance. I know traders that trade a 3-minute opening range. I know traders that trade a 1-minute opening range. They're very quick with it. And when they do that, you just got to narrow your targets down. So when you draw out those fib extensions, then that's when, you'll have smaller targets, of course, but you can still make do with them. So if we do this, so what I'm doing is I'm drawing a 15-minute opening range fib extension from the opening range low to the high, and look what you get. This is spot on. We hit target here at 446.90, and you hit your secondary target at the 786 at the 447.2 mark. So that was actually a really pretty play as far as the opening range goes for the SPY. Yeah, it was a pretty move, wasn't it? You even had the breakout, the retest of the opening range, and then you shot up from there. That was a really pretty play. Yeah. Let's see. Can you explain how to read the tick and the advanced decline chart? What numbers are you looking for? Bullish and bear signals? Okay, so for the ticks, all right, the ticks are going, well, let's start with the advanced decline issues. The advanced decline issues are easier to read than the tick readings. The ticks are going to take some time for you to get used to and get a feel for it because it moves so erratically. And until you get a feel for it, it's going to look like a lot of noise. And for the most part, it is a lot of noise. Yeah, it is pinned in this channel, so definitely check the pinned messages. But I will explain it here. We'll start out with the advanced decline issues. This is market internal number one. It is the advanced decline issues. It's the number of advancing stocks minus the number of declining stocks. So if it's moving higher, that means more stocks are advancing than there are declining stocks. If it is moving lower, that means there are more declining stocks in the market than there are advancing stocks in the market. Now, you'll see that I have a line at the 0 mark. This is just for, to a visual representation of where things are at. Are we in positive territory or negative territory? What mostly matters here on the advanced decline issues is if it's making higher highs or if it is making lower lows. Which direction is the advanced decline trending? Yeah, that's pretty much it in the nutshell. If it's making lower lows, that means market pressure is on the table. If it is trending higher, that means, bulls are in control. The most I've seen it is like plus 1200 and it kind of sustained and you still get positive moves. But for the most part, you're looking for a trend movement on the advanced decline issues. If you see the S&P, rising sharply, but the advanced decline issues is moving this way, it's a little bit of a red flag. We want to be patient at this point because the market can easily puke, as sometimes it does. And yeah, you just kind of wait for trending. If we compare what the advanced decline issues did on Friday, that's essentially what happened. Is the advanced decline rolled over, retested the 0, and then we got the move higher. So we had to wait on the advanced decline issues to be patient. As far as the ticks, like I said, the tick readings are a little bit more trickier to navigate. The tick is the cumulative buying and selling pressure on the New York Stock Exchange and other markets. Any noise between 600, positive 600 and minus 600, it's a lot of noise. As soon as you hit plus 600, that's when you want to start to pay attention a little bit, and that conviction is starting to arise in the market. And then, of course, when you get these plus 800, minus 800 moves, plus 800 is very good if you are long. Minus 800 is very good if you are short or looking to get short. Once you get to minus 1,000, positive 1,000 to 1,200, minus 1,200, those are extreme levels. And that is usually the maximum amount of buying and selling pressure that the market can handle in general. And what I also have here is a 5-period moving average on the ticks. And that is also good to pay attention to see where things are at. Obviously, if the moving average is below the 0 line, that is a negative connotation. If the moving average is above it, that is a positive connotation. It's kind of like think of the ticks as the EKG of the market. That's the best way to explain it to you, is that the ticks is the heartbeat of the market. If the ticks are going higher, so should the market. If the ticks are moving lower and that moving average is going lower, most likely the market is moving lower. So if the moving average crosses below 0 and you start to see these ticks going to 600, then to 800, and so forth, and every time they pop up to the 0 line, they just get sold off again. That is an opportunity for you to short the rip. So anytime the market has a nice little move back to the upside, that is when you want to short the market and play it that way. Same thing, if you see these positive ticks go to 600, then the 800, the moving average starts to curl higher like so. Like it did here during that opening range break, that is a good opportunity to go long, and that every dip can be bought and push higher. So yeah, that's another good way to read the market. But like I said, the tick is a little bit trickier, can be a little bit noisy to get used to. But once you get a good feel for it and you learn to read it, it's a very, very crucial tool in the tool bag. So yeah, that is how I read the market internals. But yeah, that is pinned in the chat. If you have any questions, feel free to ask. But yeah, it's great. The ticks are, like I said, it's the heartbeat of the market, and the advanced decline issues gives you that confirmation that there's a lot of bullish or there's a lot of bearish connotation to the market, and it just helps you with the conviction of the play that you are looking to get into. So yeah, if you're day trading, you want to have something like the ticks and the advanced decline issues pulled up along with like the VIX or the dollar or however you want to pull it. You'll see that I also have the put to call ratio. I kind of look at this towards the end of day sentiment. You can see that we've had a lot of bears come in as of lately with that put to call closing above 1.0. If you get a close above 1.0, that means there are a lot of bears out there. If you get a close below 0.6, that means there are a lot of bulls out there. And, you know, right now we're kind of stuck in the middle, but yeah, so put to call is a little bit different. But if I don't use the put to call for day trading. Day trading, you look at the ticks and you look at the advanced decline issues. All right, so let's see. We've gone over the main indexes. We've gone over the SPY. We're still in a box. Same thing with the Q. Same thing with the IWM. IWM's hanging on by a thread. The dollar's in a nasty little trend. If we look at the bonds, if we look at the ZN or the ZB, this is the 10-year ZN. It's a little ugly. You know, the bonds aren't the prettiest thing out there right now. It's a mess. The structure is bad. Momentum is bad. Every bounce that we've had on the bonds continues to get sold. Volume is low. We had an inside week. The only possible bright hope out here for bonds is a double bottom. That's pretty much the light here as far as bonds go. As you can see right now, we are kind of struggling. So there's that. Until the bonds get some kind of traction, it's hard to be long. It really is. It's hard to be long. That's just the nature of the beast right now. And if you take a look at the rates go up, yields, rates go up, bonds go down, bonds go up, rates go down. And if we look at the TNX, it's been on a pretty good run. Yeah, mortgage rates are continuing to go higher. We've hit this high of 43.60, 43.30. We've come back in, retested the 41 level, bounced pretty well off of it. And as you can see, if you look at the moving averages, they're trending higher. Price is wanting to push on up and trend higher. Possible one, yeah, no, we still don't have a dark blue bar on the weekly. Bullish thrust is still intact. We've reverted back to the mean. If you're a market bull, you definitely want to see the yields break down below 41 or 4.1. That's kind of the line in the sand here. That would put you on a break below the daily 50, and that would put you a break below this prior swing high. So 41 is the key spot here for the yields. If we start to break out into new all-time, or not all-time highs, if we start to break out into highs, that is a very big red flag for equities. It's going to be hard for stocks to continue higher if yields are pushing higher, and that's just a no-no. So pay attention to the yields, the dollar. That is pretty much going to tell you where things are at. Moving on to individual names. The FANG names, and really energy. That's pretty much where things are moving right now. XLE is having a really nice move. We've seen some great movement out of oil and energy names, PSX, CVX, MPC, VLO. All those guys have been having some really good moves. As you can see, energy, you got a little bit wiggle room here towards 93.43. Once you get above that, you're looking at 94.70, and then it just breaks out from there. Of course, energy plays a big factor on inflation data. Let's see, I went to the gas tank to fill up. I think it was like $3.50 a gallon here. I'm not too sure what it's at in y'all's neck of the woods, but we're still paying over $3 a gallon, which is kind of annoying. So as you know, energy costs are going to continue to rise. The Saudis are still cutting 1 million barrels per day as far as their production goes. Yeah, and like I said, if you live in Texas, hope you're doing all right, because I hear energy bills are absolutely outrageous there with the heat and all that kind of good stuff. So, or not good stuff, it's bad stuff. So energy, pay attention to those energy names. Fang names, let's go over a few of them. NVIDIA is a crucial one for me going into the week ahead. We are hanging on by a teeny tiny thread here on NVIDIA, and I know it got a lot of lines, so let me let me clear this one out because that doesn't make sense anymore. All right, so you see the blue line, that's the 50-day simple moving average. If we start to break that and have a daily close below it, that to me is a little bit of a red flag for pretty much Fang names in general, and as far as the market in general. NVIDIA has been such a incredibly bullish name out there, one of the most bullish names out there, and for it to roll over one of the biggest powerhouses out there, if this were to roll over, that would definitely be a not so good sign. So for NVIDIA, I'm looking for a break below this 450 mark. If we get a move below 450, watch out below. We do have a gap to fill all the way down to about 433, 434 mark. So looking for NVIDIA to break down. If we get it, if we do get a move back above 465, that would be a good move for the bulls, and especially if we get a daily close back above 465. So NVIDIA, watch the daily 50, 450. If we break above 465, great. And we can play things bullish. Moving on to Netflix. Netflix has been a nice power horse in the market as well. Just the communication sector in general has done pretty well. You got Netflix, you got Meta, and you got Google all in that one category. As far as Netflix goes, I really like it above 448.50 or 450 if you want to round up. And you got a nice little gap above, up towards 470. You got the 21 trying to cross above the 50. I know it's a little bit messy. It kind of resembles the indices. But for now, you got a decent structure here. We got some structure at least, and we have the opportunity for this to break out to the upside. So Netflix does have this opportunity to push on ahead. So I want to see Netflix break above 448.50, 450 for a bullish idea. If we start to lose the daily 50, then of course we'll take it to the downside. But for now, structure is good, momentum's okay-ish, and then we'll kind of have to go from there. So things are kind of in a good spot here for Netflix. If we look at Microsoft, Microsoft has been a nice player out there. Even though the market has been a little bit of a struggle, Microsoft seems like it is trying to perk up ever so slightly and wake up just a little bit and be that market leader that it's been before, especially with the struggles with Apple that we'll take a look at in a second. Microsoft, I'm looking for a break about 335.15 for a quick move towards 338.50, and from there we would probably be looking for a move to about 345, 350. So Microsoft, it's not breaking down, it's not breaking up either. It's just kind of building here at the daily 21. If we do happen to lose 329 on a closing basis, then I'll probably be looking for short opportunities for Microsoft. So above 335.15, good for a nice little day trade, or possibly even a short-term swing trade to the upside. If we get a daily close below 329, that would be bearish, and I would be looking for some movement to the downside. Amazon, another strong leader out there that's not breaking down either with the rest of the market. You can see that it is holding very good structure, very good trend. You got the 21 above the 50. The 50 is well above the 200. All the moving averages are pointing upward. The pressure seems to be leading things upward. So for Amazon, just looking for continuation back up towards 140, even that swing high of 143.73. A lot of good resiliency here on Amazon. It had that really strong day on Friday where it gapped down to the daily 50 and pushed higher. And, if you look back here on the historical data, every time we've seemed to come back and test the daily 50, came close here, it's had some powerful, pretty good moves here. Here's another test. You moved. Here's the test before earnings. You gapped up. You held here. moved up ever so slightly there. Here's your retest, moved slightly higher there. Now we're looking to see if we get another bullish here. But the daily 50 seems to be a crucial component to the Amazon. So we definitely want to the Amazon, like it's, the forest to Amazon, the store that everybody buys from. So Amazon looking for that move, continuation to move higher. Apple, yeah, it's an eyesore. It really is. It's not the same trend. It's not the same name that it was weeks ago. It's kind of a busted name. You had that 21 crossing down below the 50. You did have a nice little recovery, a little bit of a short covering rally. A lot of, market bulls took profit, and then bears took profit, and then we had that nice little bounce. But that's a kind of an ugly candle from Friday, that little shooter candle in no man's land here. Yeah, I mean, we had a strong volume day on Thursday. We could treat this as our possible low. Anything below this, I would imagine we come back in and retest 170 for Apple. So there's definitely a lot of weakness here on Apple. I'm not going to be... I'll probably watch it for a day trade if we get back above 180 to get that gap fill towards 183. But Friday's candle it's just kind of ugly. So if anything, I'd probably be looking for shorts or just leave it alone, because there's a lot more setups, a lot better setups out there other than Apple. Now, we know when Apple starts to have its trend days, it can be pretty nice, but we'll have to be on the lookout for that. But as of right now, if I were to pick, some of these other names, I probably wouldn't. Apple wouldn't be my first look. There's other guys such as Nvidia and Amazon and Google. Those would probably be my first looks, and then Apple. But that's just kind of how I'm looking. If we take a look at Tesla, another good spot here for Tesla. Tesla continues to hold the line. It's not breaking out. It's not breaking down either. It's stuck. It's just stuck. It's not doing anything. It's just, maybe we're waiting on some volume. Still seems to be fine. It's not heavy by any means. It's not low. We're just a lot of back and forth here between 258, 260, and 245. So until we get a breakdown, if we get a breakdown, we'll go short. If we get a breakup, we'll go long. It's just really that simple. So we'll see what happens. Tesla, what's good about it is the levels are nice. We know we're kind of in this tight little range here, and we'll have to wait and see. Let's see here. Industrials. I posted this chart in chat. The industrials, they're hanging on by a thread. The XLI. This has your names like CAT, Lockheed Martin, Raytheon, Honeywell. Who else do we got? Deere. Boeing's in this category. ADP. And General Electric. Yeah, you got General Electric in this category too. Now, industrials, they're hanging on by a little bit of a thread. If we get that breakdown below 105.35, this could be a nice little sector to short. But if we look at CAT is the main holder here in the industrials. That's kind of what's holding up the industrials right now. If we start to see a breakdown on CAT, look for that XLI to just puke, because CAT's doing okay on its own, but the rest of the sector is absolutely looking like hot dog water. If you take a look at Lockheed Martin, nasty breakdown off of earnings, and this thing just looks gross at this point. It had some great moves, made a new all-time high at 508, and has since then just been trending lower. Same thing for RTX, Raytheon. Moving in conjunction with everything, it's just kind of nasty looking here on RTX. Let's see what John Deere is up to. I probably wouldn't trade John Deere right now either. It's bearish, if not sideways. But yeah, XLI looks kind of bad, looks kind of naughty. Let me give you a few more. Let's see. Square, or block as it's known now, it's at the bottom of this range at 51.45. This looks nasty. Bulls got to hold this for you, 51.45. Otherwise, if you break 51.45, I imagine you come into this COVID low at about 34, 31. zone. So you definitely want to pay attention to this, because if this thing breaks down even more or even worse, yeah, that's not good. From what I understand, they've had some issues with connectivity and all that kind of stuff as of lately. But yeah, 51.45 to hold. Otherwise, you're in this nasty flush here to the downside. Let's look at Chewy. Chewy, you're hanging on by a god awful thread here. 22. Yeah, I'm not too sure what's going on here with Chewy. I don't know too much about their internals, so to speak, as far as their fundamentals go. I know my wife and I, we order from Chewy all the time, so I guess we're helping them out some. But you're, as far as the technicals go, this is trash. You're hanging on at 22. If you lose 22, you're going down to 20. Yeah, not looking good. So there are some pockets of weakness out there. Let's see, you got AMD too. Let's talk about AMD for a second. Quite the opposite here of NVIDIA. AMD's already lost its key moving averages. If we start to break 105, yeah, I'm going to be looking for this thing to come back in towards 101, 100. It's had some tough times coming back above 110, 111, and the daily 50. If we get it back above 111 on a daily close, great. We'll look at it from a bullish perspective at that point. But as you can see, price is just having a really tough time, and I'm looking for that close, or at least that push down below 105 on AMD. A few leaders out there: O'Reilly Auto Parts. You got this nice little strong trend. Expensive name, kind of thin. Just to kind of be aware. You have a good opportunity here to push towards 975 into the lifetime highs on O'Reilly. You got a daily squeeze. You got this ascending triangle trying to form up. Let's see if it can break out to the upside. Oracle has earnings tomorrow after the bell. This is going to be all eyes on this one for sure, because it had a huge earnings last season, and then we just kind of traded sideways. I guess we're kind of waiting to see how the AI sector is holding up, but this does play an important role in that aspect. It's had a nice pre-earnings run up, and yeah, it didn't die down here at 114. They held where they needed to, and they bounced back up, and yeah, looking pretty good. We'll see what their earnings are looking like tomorrow afternoon. You also have Visa. That's another one that I'm going to be looking at. Also, you got a daily squeeze that's trying to push on ahead, looking for a move towards 250. Another financial name that looks great is Berkshire. We did take profits off of this name. Was it last week or the week before? I can't remember. You got a nice little trending move here on BerkB. There's just not a whole lot out there that looks greater than BerkB. I'm still holding on to some Walmart. Walmart's at lifetime highs, looking for 164.75, 165. We'll see if we can hit that mark. Let's see. Lily's obviously off to the moon. Marriott, MAR. This looks pretty good here. Looks pretty bullish. Needs to break 206.50 for a push back into 210, 211. So that's what I'm paying attention to on that aspect. Energy, like I said, there's a lot of names out there that look really good. PSX, MPC. You can take a look at those if you have any. All right, recap. SPY. In general, as well as the Qs, it's all in a glorified box. Until we break above, we're just here. Until we break below, we're still just here. There's a lot of decent looking individual names, both to the upside and to the downside. It's best to focus on those individual names, but keep an eye on the bigger picture out there. Yeah, it's an interesting market. Narrow down your time frames and play things to your comfort, and have your stops in place just in case things go kind of wacky. But that's where we are at. Any questions, comments, ticker request? We're right at an hour, so this is where we'll wrap up if we have to. I'll send out my notes so that you have them. Thank you, Rather. I appreciate you, bud. Let me see. I should be able to post my notes real quick. There we go. All right, there's my notes if you need them. And all right, I appreciate y'all. I'll see you guys in the morning with Ace. We'll be live tomorrow morning, bright and early. Hope y'all have a good rest of y'all's evening. Who's winning the Dallas Giants game right now? Cowboys are winning 26-0 at halftime. Wow, go Cowboys. All right, have a good evening. Thank you so much for taking y'all's time to hang out with us this evening. I know there's a lot of things that you could be doing, and you're here with me, so I appreciate it. I'll see you guys in the morning. Have a wonderful evening, and take care. Night, guys.